research scholar at the Center on Global Energy Policy, Columbia University. Christoph, the markets closed out the week, started out above 70, closed out just below 70, and in between passed a $1.9 trillion stimulus package. I'm sure that sends a $1,400 check to Dr. Aldo, perhaps. But nonetheless, Christoph, your big takeaways from last week, and you need to unmute. Yeah.
Thanks for that warning, and good morning. So you think you're right. Obviously, you're right on all counts. And I think it makes me worried a little bit. You start to wonder now, at least in the short term, whether everything is priced in, right? I mean, oil is very high compared to what has happened. Stock markets are extremely high compared to what has happened. The stimulus is out the door. There's no doubt there anymore. The checks are in the mail, so to speak. The only question is how big the boost will be. The demand is coming. People in countries where the vaccination, very important, we are seeing now the difference. The countries where vaccination progresses, people start to party on the streets. Those few miserable places where they still don't get the vaccine out the door, like most of the European Union, there's dark warnings of a third wave and fruitless debates whether barbershops can open or not. But the picture is now sort of on the apex, and if it's true that markets price the future, then my first takeaway would be whether in the short term we're in for a correction, whether everything is in the price already, everything good. And then we can talk about this later. I mean, there's also the fear that there may be a risk looming here. That clearly the market is telling the Fed, we think you're wrong on inflation. Clearly the Fed has nothing to counter that with except to prove that they're right. And clearly that's going to be a very rocky road. And in a similar way, the markets are probably starting to tell OPEC that, okay, at these price levels, we start producing a little bit more, proving you wrong. Political tensions disseminating from Libya to potentially Iran. And so it starts even as if now, after all this jubilant and very fast climbing up the hill, there may be a dark side looming at the other side. I don't hope so, but there are risks for stability right now. And more or less, it's going to be a more volatile situation. That's the thing for sure.
Dr. Aldo Flores Quiroga, a former Deputy Secretary of Energy for Hydrocarbons, Mexico's Ministry of Energy. Welcome back to the table. Dr. Aldo, no sooner had the $1.9 trillion gone under the signature pen of President Biden when there was already talk of yet another stimulus to come down the road for infrastructure, maybe even another $2 trillion as vaccines accelerate in the US. Is all this money necessary? Is there going to be inflation consequence? How do you see things playing out in the US?
Well, that is the big question, right? The opinions are obviously both sides. This can generate inflation. This is not the other side says we still have enough space. But what I see is this interesting thing in which both the Federal Reserve and OPEC, or if you will, the US government and Saudi Arabia, believe that there is a space for allowing prices to increase, and that there's a way to temper the price increase if it becomes problematic. And the second part is not so easy. It really takes a much more effort to bring inflation down and to bring prices to some stable equilibrium in the international oil market than is usually assumed. So it's an interesting moment. But I guess that given this year of pandemic that we have already experienced, it's probably okay. It's right to err on the side of optimism and risk, so that we can also begin to see economic growth back on track.
From the point of view, Aldo, of the impact in the US, obviously this stimulus comes at the same time as the acceleration in the vaccinations, above 2 million people a day. President Biden has brought forward the kind of target date of at least the sort of major completion of the vaccination, where July 4th, the infamous Independence Day, is the target now for essentially the independence from COVID. how is all of that feeling in obviously you're in Texas, a state where all things have just been opened. Is the American economy and every piece of it now on that same time frame?
Well, it is moving forward. I know that everyone is on the same time frame because not everyone is sharing the Texan perspective of moving so fast in relaxing restrictions. So it's already going to become a sort of natural experiment to see how Texas fares with this relaxation compared to the other states of the American Union. And one can only wonder really if this is premature or not. I think that there are still risks there that have to be considered, and there's many other parts of the planet that still have to get on board with this and on track with this speed of vaccination. And owing to the greater expected travel season that is coming because of the pickup of air flight travel, and also the driving season coming, who knows how the pandemic is going to behave. So there's also this sense of measure, at least outside Texas.
Christoph, the other big report last week was the OECD upgrading global growth by a full percentage point, and US by even more for 2021. We also saw, just to Aldo's point there, that last Thursday was near the third record flight air travel day in the US since the pandemic, and the other two were on Thanksgiving and Christmas, so they're big holiday days. This was just a regular Thursday, and 1.3 million Americans took to air travel. Are we now well beyond COVID? COVID is just another factor, no longer the dominating one, and the OECD forecast should brace everybody to get ready for this next leap forward.
We are at least on the way there. I think that's now fair. That's now fair enough to say. I think there's a couple of consequences. So number one, this massive stimulus within the US, these are transfer payments. And one shouldn't forget, so this is basically checks given to people and it's free and it's up to them to spend it. So that determines what kind of growth we get. We shouldn't forget that when economists from the Biden camp started warning of the inflationary risks, they also made a second point, which is to say that after that stimulus program, it's very unlikely that he can pull off an infrastructure program because there will be no more money. And because of the inflationary consequences of the first stimulus, Congress will balk. And I think that's very realistic, so that many of these infrastructure measures, including important ones for the energy sector, like the support of green energy, will have a tougher time now than estimated before. But to your question, I think the proof is really very obvious now what happens. I mean, those countries which by hook or crook managed to get the vaccine out, they are talking about opening up, they are talking about normalization, not even about vaccine passes anymore. Look to Israel, or look to the Chile, or look to the US and even the UK, which started so miserably. Those countries which are still sort of having a bureaucratic nightmare in either administering the vaccine or don't have enough, like most of the European Union, are seeing this continued, talk of darkness, with Marco saying another 3 to 4 difficult months, epidemiologists warning of a third wave, and the mood getting increasingly gloomy. And so that also has two consequences. One, we now know what works, and those who had the vaccine, eventually everybody will get it. That's why we can say it's largely behind us, at least conceptually. And number two, it will change the world a little bit, because what do we see? Almost like after the last crisis, the US comes out roaring ahead, probably growing much, much faster than the rest, and Europe much, much slower, and China somewhere in the middle. So the net effect of that would be that the US, after its own nightmare of 4 years, is coming back much stronger and sort of reasserting its place at the top of the table. And Europe is falling behind more than even before COVID was already the case.
Aldo, we saw last week, as mentioned there, a number of fairly bullish sentiments, the cut from OPEC, or the maintaining of the restrained supply from OPEC. We had the attacks on the Aramco facilities. We had the very bullish reports from OECD on outlook for growth. And yet oil prices came way back from the highs that they saw on Monday. How do you see that sort of outlook for oil price and the fragility of balance of supply and demand, and that upward motion on prices looking into the coming weeks?
I was reviewing the latest figures from the EIA, and it's very interesting that the uncertainty built in the expectation for the oil price toward the third quarter of this year, it still is within a range of around $60 per barrel, meaning it can go up 20 something dollars per barrel more, go down some other $30 per barrel more. If that is the case, then what this is saying is that we still have a lot of uncertainty about how demand will end up behaving. But to add to what Christoph was saying, I think that this is also consolidating a trend that has been there for a while, and it is that the Pacific is becoming much more relevant, or has become more relevant for the oil market, the Pacific Basin, Asia, than the Atlantic. And as the US economy picks up, this also has an impact on Asia's economic outlook, certainly North American economic outlook. And we can expect a more dynamic recuperation from that whole area. But overall, I still think that there are some key uncertainties about demand, and they are related to how the pandemic will end up evolving beyond the very considerable stimulus package that we're seeing.
Yeah, I mean, to get both of those things, Christoph, the average price that Aldo referenced, $60 as forecast, and to get the demand increase, we're still with the IEA saying 5.5 million barrels of demand increase this year. You would need two pretty dramatic things to happen in the second half of the year to get an average of 60 and to get 5 million barrels of extra demand back in these coming months.
Yeah, so there's two things I would like to start out with on the oil markets. There's two myths which we need to bury, and most of them are already sort of halfway to the graveside. One is this myth that shale is dead. In your selection of articles today, there's a nice piece of somebody who sort of comes out and says, mea culpa, I was among those who predicted it would disappear. It doesn't. It's a technology, and technologies don't go away. It's not a resource or financial constraint forever. And myth number two is the investment gap. I mean, we have an oil market with spare capacity of up to 8 million. What kind of investment gap are we talking about? Maybe we are talking about some reshuffling from oil majors to NOCs, but that's
you're saying 8 million of spare capacity still available?
Yes, it's within OPEC and OPEC plus, but mostly within OPEC, but that means it's there. And so when we now step back from that, and then we do indeed, as you said, get a picture where we had remarkable discipline, where we have not yet seen a supply response outside from the private sector, where we not have seen big cheating as we usually do. But all these kind of things will be in store, and so the attention now shifts to the demand side. And I do think that the upward corrections in demand forecasts are justified. So we will probably see an increase in demand, and that makes it necessary for OPEC to start releasing its grip, and for OPEC Plus and to start issuing more products on the market, because driving prices higher, that would just result in very short-lived price spikes, all things considered, including the possibility of shale producers to start hedging again. And there's one other footnote we should probably put in people's minds to explore. Last time we said it might be that there is, so it sounds like almost cooperation from the big guys in the shale patch now. When you look at the article on the rig count in what you distributed, the rig count is not very meaningful. There's two small numbers and they're too big. But what is striking is that the biggest sort of declines on rigs were with the biggest investors in the shale patch now, with Exxon, with Chevron, and with Conoco. Phillips, so with the big companies, so they are more reluctant than the smaller ones. That explains some of the delayed response.
Aldo, your thoughts on that question? It is quite surprising in some ways that at these price levels, we're not seeing U.S. oil production rally quickly. What are your thoughts on the shale question? We had all of the majors coming out very publicly in the days ahead of the OPEC meeting. It seemed to me to trying to reassure OPEC Plus that they could hold their fire because they were also going to hold their fire, so to speak, in the Permian. Your thoughts?
But I agree with Christoph. I think that they should not be counted out. At least that's how I understood it. It's still that there's still enough drilled but uncompleted wells, the DUCs that have yet to be used. And it's still a much a flexible operation. The question keeps being, the question was a year ago about the refinancing and how these companies were going to keep afloat given the pandemic. It's still an open question, but it seems that they still have they still have to generate the cash, they still have the reserves, and they will be able to get back on track. What's interesting to me also, speaking of at what price level they will come back, is that it now begins to seem that the conversation that was relevant in 2016 is relevant again. And it is, we used to think that the minimum price that the shale producers required was $70 per barrel. And it seems that with the way the financing requirements are, it might be that we are thinking in the same terms, that we need this level of prices for this production to be activated. But I'm not so sure, given all this technological progress that is also being presented as part of the success of the industry.
Christoph, the other story last week, which caught my attention and included in the digest, was the reporting of earnings or profits made by the majors, Shell and BP in particular, quite heavy on the trading. Shell doubled its trading revenue to $2.6 billion. But what was unique, apparently, was the idea that they would go public with these numbers, that they don't usually break out these numbers for profitability on trading. I'm wondering, how should one interpret that from the point of view of what is the message by breaking out these numbers and letting the world know that they made a fortune trading oil?
Yeah, I've heard that before, and I'm a little unclear on this because I used to work at BP, and there it was always part of the income statement, how much of it was created by trading. And it was always something, as you may predict, which was thriving when there was volatility in the market and big changes, then traders make money. And it was always something which on some occasions before bailed out the firm, in the sense that it prevented, it's not a large share of the total, but it sometimes is enough to buffer losses and to prevent even worse aggregate performance, in particular in times of crude oil declines. So for Shell, I don't know that. Maybe they haven't published it before. Maybe they've beefed up their trading department. But otherwise, it wasn't exactly a secret. I think trading operations become more important for a number of reasons now. Number one, these guys have promised that they will invest less in oil and gas production. The implication is they will forego some of these relative high rates of return, and they need to make money. Number two, they have promised that they will go into renewables and renewable energies, power generation. All these things are not known for exactly generating very stellar rates of return. So number two also is they need money. And then number three, I think as we go into the serious discussions of decarbonization, and the matter becomes, are we just like Exxon and Chevron are talking about decarbonizing our own operations? Or are we also doing third stage, as it's called, decarbonization of the operations of our customers, something which BP has pledged. BP has said we will go carbon neutral, including the emissions which people issue from burning what they buy from us. Trading becomes sort of more important because excluded from this promise are things which BP buys at one place and then sells at another. and trading will be sort of a natural way of shaping the interface between the remaining fossil fuel production, for example, in natural gas, and the new parts of, say, wind and solar production, and then how to convert that into electricity. To connect all these moving bits and pieces, you need a strong trading operation, especially since markets seem to go that, despite tax, as the way of deregulation to deal better with renewables. So that shift into decarbonization gives us strong incentives just to keep the ship together, to have an even beefed up trading operation. And so I expect we will see more of that.
Dr. Aldo, also last week, two stories out of Mexico that caught my eye. One, new energy law that was announced, and even got a cover or a major story in the Economist, and also the announcement of a big new oil discovery. What's going on in your former patch?
What's going on is that there's a very heated discussion about the future of energy policy and the prospects for energy production in Mexico as a consequence. The current government wants to renegotiate the contracts, and has done so, especially in the power sector. That's the power supply side, the gas supply side, but now also the structure of the electricity, the dispatch. And so it had been initially thought, or designed in such a way rather, that the cheapest sources of power would be used first, meaning, which right now means solar and wind and other clean energy sources, and you will leave at the end coal and fuel oil and this type of power plants. But the government wants to support its national power company, and it's inverting this order because for legacy reasons, the company still operates these older type of power utilities, of power plants, I mean. So this is a very challenging problem for many in the private sector that committed many resources thinking for the long term for a particular set of rules. And these rules are now being revised. And
inevitably that challenges the potential to attract foreign investment given the uncertainty of the rules.
Definitely. So we're seeing very low levels of investment attraction in Mexico, of direct investment, compared to, I mean, they look like almost approaching pre-NAFTA years.
I mean, could the Mexican oil industry go the way that we've seen Venezuela? I mean, obviously that's a disaster of major proportions, but I mean, Mexico's oil production level has been continuously declining and continues to do so.
Yes, it has been declining since 2004, and that's the reason for the energy reform that was presented by the previous administration, and in which I had the privilege to participate in. But there's different views about how to move this reform forward. The current government prefers to have an NOC-centered model and less competitive one. Our perspective was that the model works with a strong NOC and with strong participation of the private sector.
Just like we have here in the Middle East a little bit.
In the Middle East, but also in Brazil and Norway and other successful countries. So this is now not a completely unexpected discussion, but it is also coming in the context of an electoral year for Mexico. It's a midterm election, and a lot is up for grabs. So the question is whether Mexico will continue to move forward with the reform or will actually experience some form of reversal. Right now, the way it's going, the way the legal system is going, the reform is staying. The government is making some tweaks so that it works closer to its preference. So we'll see what this means, but it definitely has thrown some sand in the wheels of potential private investment in Mexico's energy industry.
Let's go to the survey question before getting the outlook for next week from our two speakers. The question today is about air travel in the US. On Thursday, we saw the third busiest day in US air travel since the pandemic began. The two previous days, as I mentioned earlier, one was Thanksgiving, the other was Christmas. So these were two big holiday travel days. But now we're up to 1.3 million airline passengers a day in the US. The pre-pandemic average was 2.4. My question is, do you expect US travel to get back close to the pre-COVID 2.4 by the end of this year? Yes or no? Remember, President Biden said that July 4th, everything was going to be back to more or less barbecue normal. So what do you think? Will that include air travel? Christoph, the week ahead, there is not a lot of major data points guiding the markets, but we're still always now only 2 weeks away from the next OPEC Plus decision about what they will do beyond April.
Yes, exactly right. There's basically nothing coming in big terms numbers or in political appearances. And this is always these calm weeks, which are then harboring the surprises. I think the thing to watch out for really is the market. So we have seen this very nice pivot out of tech into energy and into growth and value stocks, sort of the last ones to catch up. We see in the real world now the confirmation. I really think that with these vaccinations, the odds are, if disaster pending, that we get out of this tunnel. And the question then is, will markets sort of now take money off the table? That's one thing to watch out for. Another thing is, in my home country, in Germany, there's a sort of super election year, not unimportant for the rest of Europe, I think, in several states, and at the end of it, federal elections. And this kind of vaccination disaster, I find it very hard to believe that Merkel's party wouldn't be punished for that. And that would create all sorts of things because there is no other party that large. So we are talking all sorts of possible coalitions between conservative and Greens, or leftists and Greens, and a whole new sort of playbook being tried between actually today, when these elections start, at the end of the year. That's something for the politically interested to watch out for. And then otherwise, I would just now sort of see how those countries which are well advanced down the road to vaccination opening up. I mean, last time Carol asked you whether you travel, I understand. And this is still the situation. People are free within countries but can't connect. So I'll be curious how fast these networks are going to be rebuilt among those countries which made progress with vaccinations.
Let's get the survey result before giving Dr. Aldo the last word. Yes, by 75%. Wow. That's a bit more optimistic than I would have thought. Aldo, would you have shared that level of optimism about air travel in the US second half of the year, barbecues and parties?
Not across the board, but I have to acknowledge that people are desperate to get out, and so yeah, I mean it's possible, but I think I would not have expected such a big jump.
I mean, when you think already 1.3 million people are getting on airplanes every day in America, then, and that's at a moment of, though we're coming out of that very dark moment, it would appear, but still one in which there is a lot of restrictions.
How much is normal?
2.4 pre-COVID. So it's a bit of a jump, but sorry.
I just want to say that we are now, in terms of contagions, at the level that we were a year ago.
Right.
So it's not like we're out of the woods.
Yes.
People are being right. So we came back to where we were at the beginning, and it's not exactly. I mean, there's a vaccine already, but it's not clear to me that.
Yes,
but I'm not an epidemiologist, so I should.
Yeah, and although we all became one in the last few months, none of us are. But nonetheless, these are interesting data points. Given that aviation fuel is the big part of the barrel that's still missing, will it come back quicker than maybe the market is expecting, and be another upward motion to push prices higher in the coming months? We'll have to see. But Christoph, thank you so much as always for being with us on Sunday. Dr. Aldo, thank you for joining us today. It looks lively there for, what is it, midnight? It's that the blue sky at midnight in Texas. We should all go.
Skype that coincides with the Middle East right now.
Exactly. We appreciate that, and we appreciate you staying up so late. All the best, everybody. We'll catch up with you during the week. Thank you.
All right. Thank you. Good night, Aldo.
Bye.